In this video, I'm going to talk about the VAT control, but why am I using the VAT control? I want to address a common question that you normally find in grade 12 papers, where they say calculate amount payable or receivable from SARS, right? Calculate the amount payable or the amount receivable from SARS. So this is the very common question that you normally get. So in this video, before we even look at calculations, I'm going to show you how to calculate that figure. So you can make use of a T account, which is a VAT control. I know that in lower grades, let's say in grade 11 especially, you will have dealt with the VAT input account is a separate account, and then a VAT output account is a separate account, and then you post the VAT input and the VAT output into the VAT control account. So in this particular case, in order to save your time and in order to avoid confusion, I will show you how you can use the VAT control account in order to calculate the amount payable or the amount receivable from SARS. So you should have seen by now that the first thing is that at the beginning of the year, at the beginning of the month, or at the beginning of the VAT cycle, it is possible that the business might have overpaid SARS or the business might have underpaid SARS, which means there will be an opening balance which could be a receivable or a payable. So if the opening balance is a payable, it will be on the credit side. So my balance BD will be on the credit side if it's payable, right? And automatically, you know that your balance BD will be on the debit side if the VAT is receivable. That is at the beginning of the cycle, of the VAT cycle. Now, and then the most critical thing that you need to do is to remember the two items that I spoke about. That was your VAT input and your VAT output. And we said VAT input is VAT on purchases, and then VAT output is VAT on sales. Remember, sales are an income, and income increases on the credit side. So obviously the VAT increases the amount of money that a customer who has bought the product will have to pay. So your VAT output will be this side. In other words, this is VAT on sales, and then your VAT input will be on the debit side. This is your VAT on purchases. It's this side. Now, the moment you know where to place the two, the rest of what comes up becomes easier, because we are now saying any item that you are dealing with, apart from other errors and omissions, you always check, does it affect sales, does it affect purchases, so that you are able to know where to place it. If it affects purchases, in what way? If it affects sales, also in what way? So I'm going to start with returns. So a customer can return to you, which is returns by customers, or you can return to your supplier. So if your customer returns to you, it affects your sales. And returns by customers will obviously reduce your sales. So this side here, you leave VAT on returns by customers, this side. And then obviously this side you're going to have VAT on returns to suppliers, right? Because obviously returns to suppliers, it affects your purchases. Returns by customers, it affects your sales. The next thing that you can also think of is discount. We've got discount allowed, we've got discount received. Discount allowed affects sales. It reduces sales, so you have to come on the debit side. Then discount received affects purchases, because you are given by suppliers. So you're going to have here VAT on discount allowed. It comes on the debit side. This side you're going to have VAT on discount received, right? It goes this side. Okay, like that. Okay, and then the next thing that you can think of is bad debts. Bad debts arise when you sell on credit and the customer doesn't pay you. So obviously bad debts will reduce your sales. So this side I'm going to have VAT on bad debts, or VAT on accounts written off, and automatically VAT on bad debts recovered will also come this side. Now, and then one more thing, one more thing that I can talk about here is your donations of stock or drawings of stock. We know that when an owner withdraws stock, they withdraw the stock at cost price, which means it affects what? Your purchases. The same with donations of stock. If you donate stock, it's also donated at cost price, which also it affects purchases. So obviously it reduces. So your VAT on drawings of stock will come this side, okay, and then also VAT on donations. VAT on donations will also come this side. Okay, now it is very critical that if you check from what has happened here, it also shows you that VAT on income, that is VATable. In other words, if income is to pay VAT, so your VAT on income, VAT on income will normally come this side. It's just that I don't have space there at the bottom to write it. And then VAT on expenses will come this side. Expenses, just take note of that, will come this side. Okay, what am I saying? I'm saying, for example, let's say they say to you, they bought maybe they paid electricity and water and it has to pay VAT. It's an expense. It will come to the debit side. Not only expenses, you're also going to have your assets this side as well. VAT on your assets will come on the debit side. So it's expenses and assets. If there's VAT on any of them, it will come on the debit side. But VAT on income, any type of income that pays VAT is going to come on the credit side. One example, there is your bad debts recovered. You know that when you're doing your income statement, bad debts recovered are part of other income, it comes on the credit side. The same with discount received. We know that discount received is a type of income in your statement of comprehensive income. So it also goes on the credit side. So when you're done with this, you close off this account in the normal accounting way. Now, if your balance BD after closing off comes on the credit side, if your BD is this side, then you know it's what? It's payable. VAT is payable. If your BD comes on the debit side, then you know it's what? It's receivable. So you can actually answer the question, is VAT payable or VAT receivable from SARS, by making use of a VAT control account. The moment you master VAT input and VAT output, the rest of what comes under, you check whether it affects your sales or expenses, and if it affects it, is it reducing it or increasing it, in order for you to know where to place this VAT. Remember, in this account here, we're making use of the VAT. In other words, the 15%, that's what you're talking about. That's what you put in this account. Thank you.